Hey, good morning. Happy Monday, May 29th, Memorial Day. Well, not really. Today is Friday, May 26th. I'm recording because I'm going to be off on Monday. So what's going on? Last week we lost Tina Turner, a legend in rock and roll. The other thing is I saw last week that they announced that the median age in America has gone from 37 to 39 years old. Why is that? Well, one reason is that seniors, that population is growing rapidly and people are living longer. The other reason is, as a rule, we don't have very many children under the age of 5 years old. So that was an interesting thing. And I woke up this morning because once again it's Friday to listen to the blah, 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 blah from our politicians about the debt problem. Of course, they want to raise it. You know, why can't McCarthy and Biden just sit down and take care of this? They're stressing out America. They're hurting us. But then I think we hurt ourselves because we voted for these people, right? And I understand McCarthy has sent the House home. So they're going home without getting their job done. Hold on to your 401ks. Anyway, let's get to today's topic. That's right, today's topic is homeowners insurance. Remember, 2 weeks ago we talked about renters insurance, the cheapest policy for a lot of people who are in transition. Then we talked about condo insurance last week. This week it's going to be the HO3. An HO3 policy is the typical policy that you'll purchase for a single family home. Many townhomes where they might qualify for the HO6 we talked about last week are covered by an HO3 policy. The other thing about an HO3 policy or homeowners insurance is if you have a mortgage, your mortgage company is requiring you to have that policy. So much so, if they don't receive a declaration page from the insurance company or they receive a notice of cancellation, they're going to impose their own mortgage HO3 policy on you. And trust me, you do not want to be in that situation because those policies are very, very expensive and they're light on coverages. So if you're in that situation, right away, give me a call. We'll get you out of it. So if you remember, last 2 weeks, we talked about the various coverages. A homeowner's policy has coverage C, which is personal property. It has coverage D, which is loss of use, coverage E, which is your liability. And on homeowners insurance, those are typically $300,000, and I'm seeing more and more $500,000 liabilities on these policies. And then you have your coverage F, your medical payments to others. They all have a deductible. So that's the similarities. But what's the differences? In HO3 has coverage A, the cost of the dwelling. How much does it cost to replace that? It has coverage B, other structures. Other structures are things like fences, detached garages, sheds. Those things would be considered other structures. And then the remaining coverages, C and D, those are usually a reflection of the dwelling. So for example, coverage B, other structures, is typically about 10% of the dwelling. Coverage C, the personal property, is typically 70 to 75%. And coverage D, loss of use, is typically 20%, although I am seeing some people buying up to 50%. Now let's talk about coverage A, the dwelling. This is where people will say, I want inflation guard, full replacement value. But you might say to me, hey Mark, how come my house is insured for $500,000 and it's only worth $450,000? Well, one, market value is not replacement value. Those two things can be very, very different. The other thing is built into the replacement value is cost of cleanup. Most people don't think about that. If there's been damage, somebody has to come in and clean it up. If the house is completely destroyed, I've heard it can cost, $30,000 to $40,000 to clean up a site to be able to rebuild back on it again. So built into your cost of replacement is cleanup. So with the annual increase in your homeowner's premium, people are saying, why? Well, one reason why is cost of labor has gone up. Another reason why is cost of materials has gone up. And a third reason why is there have been so many storm claims and fabricated storm claims. You know, when somebody says to you, I can get your new roof and new siding and you don't have to pay a deductible, that's the problem. You have a deductible for a reason. So be careful about those people. But these are all reasons why premiums have gone up. So once again, give us a call. We'll reshop your insurance, get your house revalued for replacement costs to make sure that you are appropriately covered. So what's going on at the MLD agency? This week, we picked up 3 property and casualty policies. We picked up 2 Medicare marketplace policies. And we're getting ready now for the certification for open enrollment for next year. The other thing is, have you taken the time to think about what Memorial Day weekend means? If you walk into my agency, we support the Hometown Heroes, which are our military, all branches, actually including the space branch now. So take the time, think about it, because somebodies have died for the freedoms that you and I completely take for granted today. Until next week, we're supposed to have a good week coming up. Weather-wise, take care.